Welcome. If you're responsible for learning and development, HR, or finance at your organization, you likely prioritize maximizing your resources while fostering employee development. Have you explored IRC Section 127? It offers a unique opportunity to achieve substantial tax savings for your company without increasing payroll costs. This might sound surprising, but it's a real solution worth considering to support your goals. Let's discuss how it works and how it can benefit your team. I'm Sasha Thackaberry-Voinovich, president at SkillsWave. SkillsWave helps organizations modernize their professional development practices by transforming underutilized tuition reimbursement programs into a streamlined and strategic learning benefit that drives real business impact. By the end of this session, you'll understand exactly how Section 127 works, how to implement it, and how your company can recoup L&D investments during tax season. Plus, I'll walk you through some best practices and pitfalls to avoid so you can maximize your benefit. Before we dig in, a quick disclaimer that this session is for informational purposes only. I highly recommend that you check with your tax professional for the specifics of applying for the Section 127 tax break. IRC Section 127 is a provision of the U.S. tax code that allows employers to provide up to $5,250 per employee per year in educational assistance that is, 1, tax-free for employees, meaning they don't pay income tax on it, and 2, tax-deductible for employers, thereby reducing taxable income and payroll costs. The requirements have flexibility for what types of education qualify for this program. Depending upon your organization's needs, your program can cover undergraduate degrees, graduate programs, and even non-credit certifications. So why aren't more companies taking advantage of this? A lot of L&D leaders either don't know about it or assume it's too complicated to set up. But spoiler alert, it's easier than you think, and the financial impact can be huge. To help you understand how impactful applying for this tax break can be, we've put together a quick model. I must stress, this is for illustrative purposes only. Your company's corporate tax rate and payroll tax rate will heavily impact the potential savings. Let's put this into perspective with some numbers. Say you have 100 employees who have all used the full $5,250 benefit allotment this year. That's a total investment of $525,000 in education for the organization. But because this is tax deductible, your company immediately saves on payroll and corporate taxes. In this scenario, the employer saves about 29% of the initial investment, $150,412 in tax savings. For the sake of this example, we used approximate averages of payroll tax and corporate tax rates, but just note that these exact rates will be different for all organizations. To determine the exact amount that your organization could recoup, you'll need to consult a tax professional or speak with your finance team. But as you can see from this example, the financial return of an educational benefit like this is too significant to ignore. Imagine helping your organization realize those savings, reinvesting that back into more training or retention programs, or even hiring new talent. Employers can benefit from IRC Section 127 by reducing payroll taxes, enhancing workforce retention through upskilling, and attracting top talent more effectively. For employees, this offers a chance to lower out-of-pocket expenses for continued education, advance their careers, and embrace lifelong learning. Together, it creates a win-win for organizations and their teams by fostering growth and development. Now, let's talk about the bigger picture. What else can be gained by offering education benefits? When it comes to retention, companies investing in education benefits see higher employee loyalty. Employees who use these programs are twice as likely to stay with their employer. That's real savings on recruiting and onboarding costs. Interestingly, studies have shown that organizations with strong learning cultures enjoy a 24% higher profit margins than those that don't invest in development. And here's a number to remember. For every dollar invested in education benefits, companies save $1.29 in talent management costs. That's a huge return on investment, and you won't get that with most other business expenses. Okay, so we know Section 127 could be a powerful tool for businesses today, but what about the future? Right now, something to be aware of is a provision that is set to expire. The CARES Act provision allowing student loan repayment under Section 127 expires in December of 2025. So if your company is currently helping employees repay student loans, this may not continue beyond 2025 or might continue in a different way. An important proposed change is the introduction of a new bipartisan bill, the Employer Participation in Repayment Act of 2025. This legislation aims to make student loan repayment a permanent feature of Section 127 while raising the tax-free benefit to $12,000 per employee annually. If this new bill passes, it could completely transform how companies support employee education and debt repayment. And that's why staying ahead of legislative changes is critical for L&D and HR teams. Changes sometimes require tweaks to your learning programs, so staying on top of these things is really important. All right, so let's get practical. How do you set up your program to qualify for this tax break? The first thing you need to do is create a written plan. The IRS requires a formal Education Assistance Program, or EAP, policy. This should outline who's eligible, what expenses are covered, and how employees can apply. And as I just mentioned, you'll need to review this plan periodically to make sure you're staying compliant with any changes. When designing your program, it's really important that you're paying special attention to eligibility. Your program cannot disproportionately favor executives or highly compensated employees. The program considers anyone who earns more than $130,000 annually is a highly compensated employee, and also calls out that a business cannot grant this benefit to an employee who owns more than 5% or the dependents or spouses of someone who owns 5% or more of the business. While we recommend that the business offer this benefit to all employees, you're actually not required to do that under Section 127. You can choose subsets of your employees for this program, but pay close attention to the requirement of not favoring highly compensated employees. Finally, it's important to know that you cannot offer employees a choice between eligibility in this program or other taxable compensation benefits. This cannot be offered in lieu of salary increases, bonuses, or any other benefit. So when determining who's eligible for the program, please keep all of those requirements in mind. Now that you've decided who's eligible for your new employer assistance program, it's time to notify everyone about it. While it is a requirement under Section 127 to notify employees, they don't specify exactly what you must do. We recommend as a best practice to use multiple communication channels such as emails, HR portals, and town hall meetings to promote this program. We have a program launch toolkit to make the lift of this step really easy when we work with organizations. Congratulations! The lift of preparing and launching this program is now behind you. To ensure that you've got everything you need come tax season to apply for this tax break, you'll need to keep records of who receives the benefit, what's covered, and how much is spent. This ensures tax compliance and maximizes deductions. You'll need a partner in your finance team on the filing, but these are the two forms that are needed for Section 127, the W-2 and the 5500 filing. For this, it's important to consult a tax professional. Come time for reporting, this is just a reminder that the investments granted under your education assistance plan are tax deductible for the employee. As a learning leader, it's important to monitor that no individual employee exceeds that 5,250 threshold, which is the limit for the tax benefit. And that's it. While it may seem like a lot, these programs are actually not a large lift to stand up, and working with a partner that understands the eligibility requirements can greatly lessen the burden for organizations wanting to take advantage of this. For organizations interested in taking advantage, here's where some companies get it wrong. The first is not having a written policy. This is non-negotiable. If it's not documented, it's not deductible. Both SkillsWave and the IRC have sample policies that can be used for those that are interested. A big pitfall: some organizations overcomplicate reimbursement. It's a messy process which discourages participation. You want to keep it simple. Consider direct company billing. Contact us if you want to learn how simple that can be. Finally, some organizations may use this tax deduction, but they only use it to support undergraduate studies. There are a ton of online courses and micro-credentials that are eligible under this program. Today's workforce values flexible learning, and utilizing it as part of your upskilling strategy can be a perfect complement to your growth planning. So if you're not, expand your offerings beyond traditional degrees. So what's next? We have a free EAP readiness checklist and sample policy at skillswave.com/tax breaks. So check that out if you want some more information. If you need help implementing an education assistance program that qualifies for Section 127 tax deduction, we've built a free-to-use platform that centralizes, digitizes, and streamlines the administration of these programs. L&D tax benefits like this shouldn't go to waste. If you're not using Section 127 yet, now is the time to take advantage of it. Thanks for watching. If you found this valuable, check out skillswave.com for more resources on making the most of tax-advantaged learning programs. Thanks and goodbye.